What's up, traders? Todd here of Trading Analysis and Inside Edge Capital. Hope you're well. Hey, listen, if you're a burger lover, this might be controversial for you. We're going to talk about a few things. Shake Shack reported earnings, crushed it. We hold the position on our active opportunities portfolio within Trading Analysis. I hold it in the wealth management business, Inside Edge Capital. And I wonder if it's taking a bite out of a cult favorite, which is a private company, In-N-Out. In-N-Out Burger. And if you haven't had In-N-Out, this might not make a lot of sense to you if you heard about it. It's a West Coast privately held company. Quick story before we jump into it. You know, when I was a young trader, 22, 23 years old, living in San Diego, California, I was like struggling to make ends meet as a brand new prop trader living off profits. So I kind of ate it In-N-Out about, I don't know, 4 or 5 times a week. And I swear I got better every single time I went there. So fast forward 20 years. We were on a ski vacation last week in Colorado. And we land in Denver, you drive out I-70, and In-N-Out has been making its way east, right? They always stayed primarily on the West Coast, in California, Arizona, Nevada, and they say they want to keep it close, so they keep high, really good quality, and they keep an eye on operations, et cetera, et cetera. Well, they've been kind of expanding out. So I brought the family over, and the kids tried it for the first time, and they liked it a lot. They said it was really, really good. Well, at the end of the trip, we said, okay, do we want to do In-N-Out again? And we wound up going to Shake Shack at the Denver airport, and the kids actually rated Shake Shack better than In-N-Out. And I wonder, it's not as good as I remember. Are they slipping? And they're starting to expand outward. They're starting to move into the East Coast, so are they selling out a little bit? And if we take a look at the numbers of In-N-Out, of course, it's a private company. And what I'm going to show you here is they're roughly the same size. Okay, so it's a private company. This is Wikipedia. So how accurate is it? They said they did 1.8 billion in revenue in 22, and they have just about 400 stores. Okay, fine. So let's take a look at Shake Shack, right? So Shake Shack has about 600 stores. And if we look at the annual revenues, just under 1.24 billion. Okay, so again, Shake Shack just reported earnings. They have about 518 stores. They've grown a lot. They've added a bunch of stores, and so obviously In-N-Out is making more money in fewer stores. I wonder if Shake Shack is starting to kind of cut into that. And again, it's anecdotal, but I just don't remember In-N-Out. I thought it was a lot better. And Shake Shack's more of an aggressive company. They're marketing, and they're starting to really hit their stride. So I'll show you the chart. I want to look at the earnings a little bit more. I'll show you the positions we're in. And I actually just wrote an article on CNBC about it. Should be right here. This is CNBC Pro, so I can't really share everything with it. But I talked about the position. I'm going to give you the highlights here. Okay, so if we look at the last earnings that came out, the street was looking for 0 cents, no earnings on 280 million. Okay, they got 2 cents on 286. So looking for 280 million in revenues, reported 286, and they came in at 2 cents a share. And if you look at the site, they made actually 20 cents a share, but there was some one-time costs in here, and it says it's somewhere in here. Where'd it go? Okay, so net income attributable to Shake Shack, so 6.8 million on net income. Actual was 15 cents per diluted share, so including buybacks and stuff. But 2 cents with sort of one-time costs. Okay, and if we look at the estimates for the quarter, let's go EPS first. So if you look at EPS. All right, so this is going to be Purple is the estimates and orange is the reported. So we just reported Q4. And as I said, they came out at 2 cents right there. It actually came in at, as I said, about 15 cents, excluding those one-time costs. So if you look at the same quarter in 2022, this is obviously the weakest quarter. So seasonally, Q4 is the weakest for this group, where they lost 6 cents, where they were expected to lose 11 cents. Well, and then Q1 turned around, and then Q2 was strong. Q3 was strong, and then Q4 beat expectations. And what I'm seeing here is, okay, if you look at Q1 of last year was also negative. Well, they're looking to post a 10-cent profit for Q1, and then look at the expectations for the summer of 24. There's a Shake Shack at the racetrack in Saratoga here that everybody loves. We don't have a lot of Shacks up here. So huge. And then the other thing that the CEO kept mentioning was margins. All right, so you look at the margins in Q4 22, the estimate was 6.83% margin. They came in at 8.08. And then you can see from Q4 22 into Q1 23, Q2, Q3, Q4. I mean, they've been really expanding the margins. And again, Q4 is a slower year. There's Q4 compared to Q4. And then they're really expecting over the next 2 quarters to ramp up margins as well. So the company is opening more stores. They are spending, but they're marketing well and they're operating well. They're really starting to hit their stride. And then you just cap that off with the revenue growth. Again, in Q4, they were at about 290 million. Or 280 million in Q4. Then Q1 they're looking for 290, and then 312, and then 314. So the analysts are looking for this guy to go to move higher, and like that matters to me. I want to know what the street is expecting. I want to know what analysts are expecting. And before we get into the chart, actually, I want to look at the rotation too. To show you some of the strongest restaurant stocks. This is the consumer discretionary screen that we look at. We break it down into all the sub-industry groups. Here are restaurants, and then there's certain logic scans that we look for here on the rotations. And some of the strongest names you're going to recognize: Wingstop, there's Shak, Texas Roadhouse, really nice hook, Dave & Buster's, Domino's, Cheesecake, El Pollo Loco, and then that's the monthly. And then let's just take a look at the weekly here. Everything's rotating fairly well, but there's only 2 that are sort of in a good northeast heading still. Those are Shake Shack and Texas Roadhouse. Dave & Buster's losing momentum. Wingstop's been losing momentum, though, very far to the right. Just started to hook back up, so it might be in good shape. But I really like the acceleration there in Shake Shack on the weekly. So that's not likely to stop anytime soon. And again, where are we on the monthly? Been a very strong, high relative performer, but has just been dropping straight in terms of momentum, and is just starting to hook. And if it could do this, it could easily start to move back up. So from the rotation point of view, looking pretty good. It helps shed a lot of light, I think, on the chart here, which has been very sideways. I mean, you look at a stock that came out in 2015, IPO'd in 15. We've bumped up against the 90 to 95 to 120 to $30 range once, twice, 3. We're coming on 4 times. So is this the time where Shake Shack can finally break out? Now, as I said, we hold the position in our active stocks portfolio for trading analysis. I hold it in the growth portfolio at Inside Edge Capital, TAG, which is Tactical Alpha Growth. And actually, we just increased the size in Shak, and I'll show you the specifics of it. But first, let's just kind of take a look at it for now. So on the weekly chart here, the first thing I want to do is look at the 786 retracement of the most recent drop. And this is what you call the retracement of last resort. This is when the biggest decisions get made. Many times I see moves into the 618 retracement that kind of get broken. And I think it's kind of a stop run move. And by the time the stop run ends, it's up around the 786. And if you don't hold resistance here, the relationship you're looking for is not just a test of the double top, but a move up to the 1272, right? So the 786 is going to be very, very important. And as I fill in some of the wave counts here, I'll just push this off to the side. The way I'm looking at this guy is I'm thinking that this may be wave 3 up in Shak. Now, typically wave 3 goes at least the distance traveled in 1, and that's going to be marked by the equality 100% at 112.77. Okay. Now we're starting to build a zone here, right? The 786 is here, 104.7. Here's the 100% projection. So this is the big time decision zone in Shake Shack. Okay. See with those expectations for revenues, margin expansion, aggressive marketing, and who knows? Maybe they're taking a bite out of In-N-Out. I never actually thought I would say it, but the kids voted on it, and I kind of agreed. They were a little salty off of I-70 in Denver going in. So tell me what you think. See you guys. Hope that helps. Take care.